In market news, Asian share markets were mixed this morning ahead of central bank meetings in the US, Britain and Japan, the latter of which might see a policy tightening. Japan's Nikkei fell 0.9% amid speculation that the Bank of Japan might tweak its yield curve control policy when its two-day policy meeting wraps. Meanwhile, European stock markets opened a touch higher and the oil price slipped more than 1%. US earnings season also continues with the likes of Apple, Airbnb and McDonald's amongst the many companies reporting this week. To help us look into the week and what to expect, we are joined by Gary Boon, who is a portfolio manager at Rand Swiss. Gary, thank you so much for your time. Your sense of market performance right now, with the fact that this week we've got a Fed meeting, we've got the Bank of England as well as the Bank of Japan.
Well, I think we've got an enormous week in terms of both corporate earnings as well as economic data prints and central bank announcements. So there's a lot of moving parts, and we have seen significant pullback over October, and we do seem to be getting, I suppose, a little bit of a lift today. So we've got the financial index up around 1%, the all share index up just over 0.5%, resources lagging only up about 0.3 at the moment. But the currency looking a lot firmer. So we've seen the rand strengthening down to 18.81 to the US dollar. It's also firming against some of the other majors. And I think a little of relief that the international, that the conflict in the Middle East has not widened. And that's seeing Brent crude oil slipping as well. So back below $90 a barrel.
Right. Ahead of that Fed meeting, what theme or data point is in the driver's seat right now?
Well, I don't know if there's a data point specifically, because the big data point is actually going to come out after the meeting, which will be the non-farm payroll number on Friday. And we're expecting unemployment to stay around that 3.8% level, expecting the US to add 188,000 jobs compared to a big lift of 336,000 jobs last time around. But as I said, that's going to come out after the meeting. And I think that, it seems to be the market is pricing almost a foregone conclusion to the Wednesday announcement. A 98% chance based on federal funds futures that there will be no change. And it's going to be key to listen to what Jerome Powell has to say and try and understand where's the terminal rate, where's the peak interest rates going to be. I don't think you're going to get too much out of him on Wednesday evening. I think it's going to be very non-committal here. I'm sure he'll once again point to the data. But looking at it, there's only around a 20% chance that we'll get a hike from the Fed in the December meeting. And there's about a 10% chance we'll start seeing cuts in the US federal funds rate by March next year. So obviously that pricing is going to move around on Wednesday evening, but I would expect him to be treading a very careful line and just reiterating to markets that until you see a degradation in some of those economic data points, until you see unemployment lifting, and until you see growth starting to slow in the US, the Fed's work really isn't done.
When you look at US earnings season, what kind of narrative are you getting so far versus the type of stock by stock story that we've been getting so far this year?
Yeah, it's difficult to say. So I think you are starting to see the tighter financial conditions starting to play into earnings. You've got of the, call it half of S&P 500 companies that have reported so far, you've seen just under a 5% lift in revenue, and you've seen earnings up around 13%. So that to me says that it's still a pretty strong earnings season. If you look at it, you've got just over 100 of the companies beating on, that's out of around 250 beating on the revenue line, which is difficult. I mean, that's the more difficult line to beat. It means that there's actually still growth within the economy. You've had around 60 companies disappointing in terms of earnings, at least in terms of revenue. But if you look at that earnings figure, it's a very different picture. The companies are becoming more efficient. There's no question about that. Maybe guiding the market's expectations a little bit lower in the analyst meetings. But 184 companies of companies reporting so far have beaten earnings expectations, so doing better than what the market thought. And yet the markets are still falling. So I think a lot of the sell-off that we've seen in October is probably largely macro factors that are playing into it, because the underlying company reports have been fairly strong.
Let's look at South African earnings and some of the companies that have put their numbers forward. What's your sense of the balance sheets and cash flow, etc.?
Yes, I think South African corporate obviously under pressure. We've got a very difficult environment. We've got a lot of earnings updates coming out, like Glencore, Imperial, at least Impala, Dis-Chem, all coming out this week. But the theme has been quite clear that the operating environment is very, very difficult. We're facing, load shedding has significant costs. Almost every company is reporting what their diesel costs are. It's a difficult environment to operate in, but at the same time, South African companies are very well run and very well managed. And if you talk specifically in terms of the balance sheets, etc., South African companies, they will lay off staff. They will shrink operations. They're not the kind of companies just to walk headfirst into a wall. They do what they can in a tough environment, and I think often almost pull miracles out of their hats. So, I mean, our business sector is still strong, given a very, very difficult environment.
What would you say is the one stock to watch, whether it's locally or globally, and why would that be the case?
Oh, there's so many to choose from at the moment, but probably the biggest and most important earnings released this week is going to be Apple. Apple's going to be out Thursday, so that's the 2nd of November. It's definitely going to be interesting. I mean, there's not a lot of the new iPhone sales that are actually going to be included. It's only around a week's worth of sales, but Apple really seen as one of the juggernauts in the tech sector, and it really has been the tech sector that's been lifting the overall index. If you strip out what they're calling the Magnificent Seven from the S&P 500 companies, we're actually down for the year. We're facing a pretty rough year in the equity market, largely thanks to higher interest rates. So I think a deep look into Apple's numbers on Thursday is going to be very interesting, and hopefully it allows the tech sector to keep running.
All right, Gary, thank you so much for your time. That is Gary Boon, who's a portfolio manager at Rand Swiss. And as he mentioned, it is going to be a busy week with the medium-term budget policy statement on Wednesday. And that same day, we have the Fed meeting where we are not expecting an increase in interest rates, but we are hoping that the Fed is going to give us some type of signal as to when they are looking to cut rates, if at all, this year, given the fact that the labor market has been so strong. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.